Let's get more on Alphabet with Fast Money friend Gene Munster of Loup Ventures. Gene, do you think investors will rethink how quote-unquote safe Google is, given what it said about advertising in particular?
I think they will for the next 3 months, 6 months, maybe even 9 months. But I think that the answer is probably going to gravitate to lessons from history. And I just want to put some perspective. Everything that has been laid out today is accurate in terms of the headwinds. And I'll just add one more negative, then I'm going to answer your question. Is that search grew at 4% year over year. A year ago in September 2021, it grew at 44%. So talk about a deceleration, that's all bad. And to your question, will investors get over this? I think ultimately they will, because we're investors in Google. There's nothing in this that makes me think that the business won't rebound. Now, go back 13 years to 2009 when they reported their September quarter. I was an analyst at the time. I was on that call. I think I asked a question on that call, but Eric Schmidt, then CEO, led off saying that they had a strong quarter and they grew revenue by 7%. Despite a difficult economic environment. In the subsequent year, in 2010, they grew revenue at 26%, and the average growth over the next 5 years was 25%. And I think the takeaway is that Google's business is impacted by the macro. It was impacted 13 years ago. It's being impacted today. But we cannot separate our lives from their products, and advertisers understand that. And I think ultimately, investors will recognize that and shares will respond appropriately.
It's interesting, Gene, I mentioned the headcount. I don't know if it's a big deal or not, but margins clearly are a big deal, and those are declining in this environment with headcount increasing. I mean, that math to me doesn't sort of add up. Something's got to give there. Am I looking at this correctly?
The only piece I would mention is that September typically is a strong quarter for headcount. They hire a lot of people out of college. They get the summer off. They come into work in September. So there is a little bit of seasonality in those numbers. But I think that the broader trajectory around headcount is a flattening. It's still going to grow, but the pace of headcount will decline. And I suspect that we're going to hear a lot on the earnings call about costs, about some of the things that the company's been talking about more recently, about tightening headcount and effectively improving margins, getting more productivity. I think they've talked about getting 20% more productivity out of people. Investors will like that long term, too, because that should have a positive impact on margin.
Stock is down 6.3% right now. The call is about 9 minutes in, Gene. And I'm curious what you think, how you think they're going to approach guidance. That seems to be, that will be very important in terms of how they speak about what they're seeing, the trends through the quarter in terms of ad spend, et cetera, if they're seeing weakness from small, medium-sized businesses. How do you think they treat that?
I think they're going to draw a line between brand advertising, which is what we heard from Snap last week, and what we're going to hear from Meta tomorrow, which is all negative around brand advertising and performance, direct response. I think they're going to talk about an increased softening around that and probably not as much visibility. So I suspect that, that the substance of this, of their commentary is probably going to be neutral to slightly negative. But I don't think, their business is being impacted by the macro. We saw it tonight. The macro is not turning on a dime in the next 2.5 months. And so I suspect we're going to pick up commentary. Again, I don't think that changes anything about where this business is going to be long term. I think a year from now, we're going to be talking about 20% growth back in search. All
right. Gene, thank you. Gene Munster,
Loup
Ventures. And the company just addressed your headcount issue, Guy. That Q4 additions will be significantly lower than Q3.
Yeah, so Sundar Pichai, the CEO at Kara Swisher's Code Conference, this was, I think, the first or second week of September. He was the one who made that comment about becoming 20% more productive. And a lot of analysts and I think a lot of onlookers were trying to figure out what that means. And so, again, when you see the sort of quarter they had, misses on these core business segments, when we get this guidance, I suspect that it's not going to be particularly great. And, let's just think about this, how investors think about this. You're looking at the out year, right? So if you said right now we're expected 12% earnings earnings and sales growth, and the thing's trading about 18 times. That seems very reasonable relative to itself and relative to many of its peers. Why not just guide down the current quarter? They at least have that visibility right now. Let the thing flush a little bit, because I think if you get to Guy's point, that $90 or $85, you're basically filling in. You're round tripping all the way back to late 2020 or so, and then you set up for a stock that we know is going to be a market leader in all those different areas that they have, and then they can just start beating again as we get into 2023, when the likelihood is when we have that recession.
I mean, the question, though, going into this quarter is why don't all of these companies just take the opportunity and just throw the kitchen sink out there and just say these are going to be the impacts? I mean, for Alphabet, it was a 6% FX, impact. They knew that. I mean, they didn't know maybe 6% specifically, but they knew there was going to be an impact. These companies know that there's going to be an impact. And is a neutral to negative guidance on the call, or neutral to negative commentary on the call, will that be good enough, Julie? It sounded like you're having a crisis of confidence in your Alphabet holdings. Is that going to be good enough, or do you say, you know what, I know things are going to get worse in the near term, in the next 3 months, and I rethink my position?
Well, I think everything depends on your hold period, right? Like, I'm a slow moving turtle. My average hold period is 5 years. So for me, looking at a business like Google with a franchise like that, it's fine. I don't see anything that's really fundamentally impairing that business. My biggest concern always with Google is regulatory, right? That's longer term what I see as being a bigger issue. But, I think on the headcount and the need to cut costs, I think we're going to hear that. We already heard that last quarter, but we're going to hear it a lot more from some of these tech businesses. It's like, that's it. No more ping pong tables, no more kombucha stations. It's done. We need to actually make people come into the office and do their jobs. And I think that's going to really flow through the numbers, because these businesses are fundamentally very profitable.